Earlier this morning, we got the final reading of the third quarter GDP, 3.4%. I would say very respectable. Joining us now, Kevin Hassett, White House Council of Economic Advisors Chairman. Kevin, you happy with that number?
Yeah, it was almost exactly what we expected. You know, there are a few small revisions, but the fact is that we're looking almost certainly we're going to have a 3% year. And that's something that people really thought was impossible. Don't forget, if you go back to 2016, GDP growth was only 1.6%. And so to have another 3% quarter, fourth quarter right now, our models have about at 3%. And so we really are at a sustained 3% pace. And, you know, I was listening to the segment before, for sure there's a lot of volatility in financial markets, but the economic data continue to even surprise on the upside a little bit.
But is it getting a little softer? And, certainly when we look at the global economy right now, Kevin, the fear is that what's going on, Europe on the brink of recession, the slowdown in Asia, all of that's going to wash up on our shore, and it's going to drag us down. What are your thoughts there?
Well, you're right that it's going to drag us down at least a little. But the fact is that, our exports to those places aren't exactly raging, because we have all these bad trade deals that we've made. And so when their economy's slow, then we don't actually respond nearly as much. In fact, if you look at it, Europe has a big trade surplus with China, for example, and we know how slow the Chinese economy is right now. That's really harming Europe at the moment, but it's not having a big impact on us because China has such a big surplus with us.
Good point. Another one for you, Kevin. Listen, we know the rest of the economy is doing pretty well, but the housing sector has shown a lot of weakness.
Sure has, yeah.
Why is that?
Well, I think that the housing sector, that there are a number of factors. One of them is demographic. It looks like 30-year-olds aren't buying houses the way they used to. Another is that, mortgage rates have gone up. And there's also a lot of problem that in the places that are really booming, they're starting to hit zoning restrictions where, basically the land that's open is not a place where you can build a house. And so there are a lot of factors. But you're right that housing has been kind of a negative this year and for a little bit. But as far as the outlook goes, don't forget that one of the things that kicks us into, difficult times and financial crises and so on is a booming housing sector because that drives prices up. And then all of a sudden, if the market turns just a little bit, then people start defaulting on their mortgages, and that can cause a lot of disruption. And so the fact that right now we're booming, but we're not being fed by this housing boom means that there's a lot of legs for future growth and also much less risk of financial problems.
But based on what you've just told me, Kevin, then the economy is doing very well, so the Fed could be, allowed to raise rates, which hurts mortgage rates, which makes the housing sector even worse. I mean, which way do you want it?
Well, don't forget that it's the longer-term rates that influence these things. And if you look at what's been happening at the longer-term rates, it's not exactly moving one for one with the movements of the Fed. And so absolutely, if we look ahead, then, housing is a place where we're looking for a turnaround. And it's definitely been a weak spot this year.
It has indeed. All right. Kevin Hassett. Kevin, thanks for joining us on this Friday.
Merry
Christmas to you.
Happy holidays, guys.
Same to you.